Despite the tough oil environment, national oil company Petroleum Nasional Berhad saw an improved performance for its third quarter, due in part to its group-wide efforts to reduce costs and improve efficiency in cash management. Petronas said its profit after tax jumped nearly 350% to just over 6 billion ringgit from 1.4 billion ringgit last year. This was thanks to lower net impairment on assets and well costs, as well as higher average realized prices for most products. However, third quarter revenue dropped by 18.9% to 48.7 billion ringgit due to lower sales volume. As at September 30th this year, Petronas has spent 35.9 billion ringgit in capex, which was mainly used for its rapid project in Pengerang, Johor, the Sabah ammonia urea, and its upstream businesses. As for outlook, Petronas said it remains uncertain as the current oil price continues to pose significant challenges to the industry, but says in the face of that, it has been responsive with strong operational efficiency and financial discipline. CIMB Group saw a 28% increase in third quarter net profit on the back of higher net interest and non-interest income. Earnings came in just at over 1 billion ringgit, up from 804 million ringgit the previous year. Also boosting the numbers, an almost 150 million ringgit gain from the sale of CIMB's stake in PT CIMB Sun Life. Meanwhile, revenue climbed some 7% to 4.1 billion ringgit. CIMB says it's now approaching the halfway mark of its T18 strategy and that it will fine-tune its programs to ensure a sustainable growth trajectory. The nation's second largest lender says it's also excited about Vietnam, where it will begin operations in December 2016. With a stronger foundation in place, the group believes it is now in a better position to advance its ASEAN franchise. Boosted Plantations Berhad saw a 58% leap in net profit for its third quarter, driven by better palm product prices and lower OPEX. 3Q net profit came in at 37.4 million ringgit compared to 23.6 million ringgit the year before, while revenue grew by almost 20% to 199.3 million ringgit from 166.6 million ringgit last year. As a result of the solid numbers, Boosted Plantation declared a 5-cent interim dividend for the quarter. The company said that the rest of the year would be driven by CPO prices and crop production, noting that the weak global economy and the adverse effects of El Nino would persist, while demand could see impact from rapeseed oil reserves in China and weaker renminbi. However, Boosted Plantation reassures that CPO prices are expected to remain encouraging. Former BSI banker Yeo Jiawei, the man on trial for witness tampering in a money laundering case linked to 1MDB, has admitted in court to having lied to Singapore's Commercial Affairs Department, part of the island's police force, to hide his use of a second phone line to communicate with his former boss and associate, both witnesses in the case. While under remand, Yeo told the CAD that he neither owned nor used a secondary mobile line. But under cross-examination, Yeo revealed that he had indeed been using one since October last year. This was despite being warned not to contact the witnesses. Yeo is currently facing a total of 11 charges, ranging from money laundering and cheating to forgery and obstruction of justice. AirAsia boss Tony Fernandes says full-service airlines are heading for big losses as they do not have a coherent strategy. Fernandes said in a tweet today that airlines just can't be both low-cost and full-service, and that airlines that try to be both or have more brands will have a painful experience. This comes right after Malaysia Airlines CEO Peter Bellew reportedly said that the carrier was looking to buy 25 wide-body jets next year. He was also cited as saying that the airline has options for 25 more aircraft to compete against budget carriers, and that it is offering promotions on its business and economy cabins. Fernandes isn't alone in dismissing efforts by traditional carriers to meet demand for cheap travel. According to a Reuters report, US industry veteran Bill Franke says that big airlines have big airlines practices and therefore are unable to shed the deep-seated cost structures. Having said that, Franke also believes that Asia has yet to see a truly low-cost carrier and that there is still a gap in the fast-growing budget market for airlines with even fewer frills.